All right, we're live, Howard.
We are live. Welcome, everybody. It is the first Monday of April. Well, we're all fools if we were long. If you're long stocks, you're a fool. But we're all fools. It is April 2nd or 3rd, and this is Momentum Monday. Say hello, Ivan.
Hey, Howard. I mean, the good news is that if you have a well-diversified 60-40 portfolio, both bonds and the S&P 500
Nobody watches our show does. So let's get to the current.
Down about 4% year to date, so you're down either way. So you're not that diversified.
Oh, the 60-40 portfolio is down 4% on the year?
At least. I mean, both the U.S. Treasuries and the S&P are down about 4%. So
it's pretty rare. Okay.
It's very rare, yes.
Well, the good news is if you've been watching us for about a month, we've been like, be careful. And the one area that's worked is enterprise stocks that will not, if the market continues to sell off, they will catch cold like everything else. So let us go to the markets because today is an important day. We might have closed below the 200-day moving average. Ivan?
Okay, I'm sharing my screen real quick.
Share the screens, not our faces.
Yeah, just a second. Share a screen. And okay, can you see my screen?
I can see the screen. Is that what everybody's seeing, hopefully?
Yes, they should be able to see my screen only.
The pain is over, people, and you are now just looking at the pain of your portfolio. So we did have a little bit of a late day bounce. I am going to say that we are in trouble. I hope I am wrong. And let me give you the macro reason, then Ivan, you will dig into the micro. Macro reasons I've been talking about, the market is acting tired. And obviously, we're going to have people saying double bottom and we didn't close on the lows. And they're all important things here. But, you know, I look at it, even though it's a fine tooth, we are below the 200-day. Ivan, is that what you're registering?
Yes, for the S&P 500, yes. I mean, for some people it matters. For others,
we're watching this level and we closed below it.
We closed below that level.
Yeah, and that's what all the machines are looking at. And so if it closed below the level, I think it's significant. Hopefully tomorrow we begin a rally in a new bull market. That is always possible and what I'm hoping for. But I am in defensive mode as I've been now for a month, at least a month. And I've been writing about there will be bounces. And of course there will be bounces. But you do not have these like the bounces that Trump was bragging about a couple of weeks ago in a bull market. This does not feel like we are anywhere near a real bottom. Now, we are not in a horrific market. We are at the beginnings of what could be a horrific market. And that's why you have to be careful here. You don't have to sell everything. You don't have to panic. But you do have to be careful. And you have to be on guard and be willing to shed things. The first one for me is probably Goldman Sachs. Let's pull up Goldman Sachs. I hate, well, again, it held on. But, you know, right here below, and it may just take a gap down. I'm giving up below, you know, 240 on this stock. So again, like the market is acting like I'm going to lose this company, and I'm okay because that's a warning that it's going to get bad for a lot more companies. But where's JP Morgan, Ivan? Not as bad as Goldman, but struggling.
They all look very similar, and as they should during corrective markets when correlations go to 1 and all stocks just move together regardless.
Again, this is like a tiny move down. If you go out to a weekly or a monthly, I mean, it's a blip. So again, you can't panic. These companies are still a massive uptrend, but we're trying to not fall in love with anything right here. So again, I'm using a simple rule here. For me, a definite close below the 200-day moving average is like I hate owning stocks or adding new stocks when we're in a shitty market, and so I'm going to live by my rules right here, and we are close. So you just have to be on watch. Ivan, go you comment on the S&P now. I'll shut up.
Okay. I mean, in a short-term perspective, what matters the most in the stock market is sentiment. And currently sentiment is getting very pessimistic. So, you know, we can get that pessimism into a So pessimism can lead to lower prices, and lower prices can lead to more pessimism. So
yeah, CNN has a good fear and greed index. Just flash that quickly if you want. It's like 7%. I saw today.
I need to find it first. Let me see.
CNN fear and greed.
Fear and greed.
It's a really nice little product they built. But a lot of people. It's the only thing I'd like to check once in a while. You can tell the sentiment sucks. So we're at 8.
We're at 8.
I mean, it's a pretty good index. I mean, again, I don't like using it as a 1 and down, but I mean, you know, I've seen it at 1 before. But you don't have tops when it's an 8. You have tops when that's at 100 or 90, and so now there's fear. So there is that's good. You need some fear. Keep going.
So yes, I mean the S&P, the Russell 2000 both closed below the 200-day moving average today. For many people, maybe it doesn't matter, but for many algorithms, it does. Let's not forget that a 10% market correction is normal to happen at least a year, at least once every year. And 2017 was a very unique year where the biggest drawdown was only 2-3%. And it seems like people became conditioned to buy every little dip and to make money by buying every little dip. But this is not how the market works. You know, in a long-term perspective, it's normal to have 10 to 20% pullbacks. And if we take momentum stocks as a group, most of them end up giving up 50 to 80% of their upside moves. So if this correction has more legs, if it continues for a few more weeks, I would not be surprised to see many of the price leaders from the past 2 years pull back substantially, you know, have 20-30% pullback.
Google is, Apple's still strong, Netflix is still up massive on the year, even Amazon. Pull up Amazon, it's still up huge on the year. I mean, he's not like, I mean, it's kind of a joke.
If you pull the S&P 500 map with, you know, year-to-date performance, Amazon is probably still the only green island on that map.
Most I get interested in Amazon, to be honest. Anything below, again, like I own some, so I'm like not selling. I was selling on the way up. I mean, at $1,000, if it filled that gap, there'd be a lot of fear, and it wouldn't be healthy. But at the same time, I mean, it's the only point that looks interesting to me. So it's like, you know, you either own it or you're out, or you should have some thoughts about where you'd want to own it again, and you know, somewhere in the 1,000 to 1,100 space, semi.
In a real,
only be back at last summer's prices.
In a real correction, you know, Amazon can pull back, you know, under 1,000.
Oh yeah.
And I'm not talking about, you know, a tiny little 10% pullback in the stock market, which is nothing. There's still so many stocks that continue to hold within, you know, 5% of their all-time highs. But so the rule of thumb says that stock that remain their 52-week highs during market correction could be the next market leaders when the market reverses.
So let's end and move to that. Let's look at some market leaders we got.
Okay, but you know, there is one but. If the correction continues, everything will get hit.
Yeah,
eventually.
Including I'm saying if the market turns, where will the money flow? It's already been flowing to enterprise. My gut is, here's my gut. People, this is just not what you should do, but what I feel. I feel like the air will come out of these enterprise stocks. So I wouldn't be surprised to see Zendesk in a correction in the mid-30s. And that's why I was selling, so I could buy some back. I wouldn't be surprised to see Okta back in the high 20s and low 30s. That could only last 2 weeks. It could last a day. If they're really strong, they will recover very quickly. But you need to have a shopping list. I want to own enterprise stocks, but I want to own it 30% cheaper. You know, now I could be wrong and they drop 30%, I buy them and then they drop another 30%, and that's the risk. But I feel like based on where the strength is, that if there was an air pocket, these are the ones that I would buy first. So I want to have my, you know, Mongo's another one. VEEV is a small one that I was looking at this weekend, which is in pharmaceutical enterprise software space. Can you pull out longer term on that?
Yes, 1 second. All right.
You know, massive breakout. You know, and if we really get a panic, the stock will go right back to 60. It may not last, but you have to be prepared and start understanding the stocks you would want to own, because we should be hoping for these pullbacks. Okay, next would be Lulu. Broke out. No one expected a high price apparel company to break out. I mean, this is a combination of everything that a brand that's going to be successful post 2018 in an Amazon world has. Let's go deeper on Lulu quickly, longer term, Ivan.
So basically, if you want to trade on the long side,
okay, so look at this. Look at this breakout. There is no way you would predict in 2018, from where it's been trading, that this stock. If I showed you this chart, you would think it's Facebook or you know, the last month. You would think it's like a tech stock. It isn't. It's Facebook of ladies behinds, as I used to like to say. But it is okay. Squeeze back up to recent. Look at that 5-year breakout.
It's a boring yoga apparel stock. I don't think that we can rely.
I'm not recommending. I'm just saying, look what's working, and money will flow to this if the market turns. Yeah, it's extended from its averages, but this stock is breaking out after 5 years, and it's for a reason. My daughter just spent a fortune in there this weekend. She came home. She said, "Dad, I love the new patterns." I mean, it's a fashion meets athletic meets technology meets retail meets micro brand. Has, you know, they really have a lot going for it, and you know, they stand for what they stand for, and that is a massive breakout in a terrible market. So Zillow is another one that I'm looking at, kind of a conglomerate, a massive all-time high breakout. If we scroll back, Ivan. They've survived the Trulia IPO, Redfin or whatever, that, you know, all the competition. Yeah, there's Redfin crushed, you know, from its IPO, but hanging in there. But, you know, Zillow's the leader, and it's on my list. You know, enterprise stocks, Lulu, Zillow. What else is looking interesting, Ivan? So those are my ideas. And it's not a broad list of ideas, right? Like, it's just, we're in a correction, so I don't need to have 1,000 ideas.
I mean, there's some emerging market stocks. I guess not this one. BBSR, I think it was. There's some Brazilian bank. I need to look it up. So we can take a look at the SO50 list, and it's a list that typically showcases market leaders, you know, stock that are still holding near their 52-week highs, stock with established momentum. But as I said, even those stocks will have a substantial pullback during a prolonged correction. And so yes, we have a lot of enterprise software on the list. LivePerson is something that is looking interesting, a new addition to the list.
Yeah, it's enterprise call center.
But keep in mind that there are many professional short sellers that are looking exactly at the stocks that held the best during the first couple of weeks of the correction, and they're going to target exactly those stocks that held. So don't be disillusioned that, you know, if this correction continues, those stocks will get hit as well.
Yeah, we're in that phase where it's either going to catch up to the downside, but, you know, with Amazon starting to get hit and Netflix starting to get hit, let's pull up Netflix. You want to watch these. Like, if Netflix, you know, has another 30, 40 points wiped out, you need to start looking at which stocks are the strongest, and if you want to trade them, own the strongest. And, you know, if Netflix gets down to 230 or 240, or I don't think it's going to happen that as quickly as people think. So you got to be really patient, but you got to know where to look. And if you're a long-term investor, just, you know, it's okay not to be buying stocks quite today. We're a little bit of no man's land. That would be my summary. And let's keep it short. Ivan, is there the marketwisdom.com? You know, if you want to study the way Ivan does this every day, it's, I don't know, it's 80. It's so cheap. You really should just be looking at this list every day and conversing with Ivan. But for me, below the 200-day, I'm on defense. I hope to be back on offense really quickly. But, you know, looking at Amazon and Netflix the most, they're so far away from like moving averages. It just doesn't excite me to be the hero here. And I hope they go back to all-time highs, because that'll be good for everybody.
Yeah, we definitely need new market leaders. And
yeah, the market was screaming for it. You couldn't just have FANG. And the market is set up for new market leaders. It's not crypto, for whatever reason, mostly because there's no fundamentals, right? People just aren't using, you know, we're back into, you know, last year's bases for good reason. It's just the hype hasn't lived up to, you know, I love Ethereum as a brand play in this space, but who knows what the hell these things are worth. There's no reason this can't be at $100 and still kind of be in an uptrend. So you just have to really be careful. And this is where I look at Amazon and Netflix. You know, Amazon and Netflix on the Ethereum log are at the equivalent of what Ethereum was at 1,000, right? Of course, Amazon has cash flow. Of course, Netflix has cash flow. Pull back the Ethereum chart there, Ivan. But if we're going into a bear market and the president feels he can, you know, have tariffs and put up walls and single out companies for contracts that they have. I mean, why hasn't the post office guy resigned if he's the guy that cut that bad deal? It's so frustrating. But I mean, in the scale of things, Amazon is where Ethereum was at 1,000. And so you can see how quickly things can deteriorate, not because the company's bad, but because the market disappears. And so you've got to have a plan here. I think defense works, but I think if you're going to go offense, you know, focus on what's been working, and then really be particular about what you buy. And that's, you know, marketwisdom.com and the names Zillow.
Well, I wrote a post about, you know, if you want to trade in this market, you know, how to approach it, at least from a swing trading perspective. So real quick, just give me a minute. So
yeah, you're doing this every day. You're updating this every day.
If you want to trade on the long side, you know, the types of setup that works are, you know, stocks with fresh news, basically with big earnings surprise like Lulu had last week. But most of those stocks are good for intraday trading on that specific day. They're not really good for swing trading in this corrective market. And also high momentum stocks on the big upside days, because we know that even during corrective market, we can have like huge 3-4% face sweeping rallies below the 200-day moving average.
Yeah, not for me, but definitely if you like this stuff, Ivan is on this, and that's why we have Market Wisdom. For me, I'm focused on finding great founders right now in markets like this, where there's people are running scared around crypto, and VCs are like, this is where, you know, my work, this is where I get paid for my work. So, all right, buddy.
All right, then we'll wrap it up. Thanks, Howard.
17 minutes. All right, everybody.